Hello, MSA and MBA folks. Thank you for watching our presentation. Today, our group is going to present about the Yelp and its IPO processes. I believe many of you may have heard about the company Yelp, or some of you may even have posted reviews or checked the website to find place to eat out. First, as our outline, we are going to start with overview of the company and reasons for IPO. Second, statement analysis. Third, IPO processes and reporting issues. And at the end, we are going to talk about the company's stock movement evaluation and the recent issues that the company has been facing.
Hello everybody, let's talking about the company description. Yelp is a Web 2.0 company that operates a social networking and user review website by the same name. It hosts an online database of the user-generated reviews of local business, and it's the largest website in the United States which can let people put their comment on a net. In 2004, started by the former PayPal engineer Jeremy Stallman and Russell Simons in San Francisco, through the restaurants, shopping centers, hotels, tourism, and other areas of business. Users can submit their comment to the merchant scoring in the Yelp website. Also can exchange their shopping experience and so on. To search for a restaurant or hotel in Yelp, you can see the brief introduction and netizen point theory. The reviewer evaluation offer the star. Usually comments are experienced with the mentioned service customer. Most image detail comments. Yelp established a San Francisco market was found in the first year and become a local entertainment guide. A new generation of the internet workers at the same time. The first batch of users has also bought a great deal of the content for the Yelp. Until now, the San Francisco Bay Area still accounts for all the activities of Yelp 30%. Then several major local markets were Los Angeles, Chicago, and New York. Specific common share catering and shopping than the largest. Each count for 20%. Secondly, family service, beauty of self-cultivation, and entertainment account for 10%, 9%, and 8%. And the slogan of Yelp is Real People, Real Review. Now let's talking about the reason for IPO. As we know that before 2011, Yelp hasn't made any income in the international market. The company began construction of the international market sales team in 2012. Relevant international market development will cost up to 15 million. And Yelp's operating costs are too high, especially in marketing costs, and are still rising. Yelp's market by the staff salaries, welfare, option compensation, travel, and of the sales and marketing team employee incentive compensation, including brand construction and other conventional market spending. Yap pointed out that the company is obtaining website and mobile application traffic is not marketing expensive. The community manager team responsible for the local communicate extension and brand building. Now let's talking about the use of proceeds. Yelp intending to use the net proceeds of the offering for additional working capital and general corporate purpose, including sales and marketing activities, general and administrative matter, and capital expenditures. In addition, Yelp may use portion of the net proceeds for the acquisition of or investment in technology solutions or business that complement its business.
Now let's move on to talk about the initial offering. By the time Yelp prepare IPO, it plans to offer 510 million shares. Of this amount, 200 shares are Class A common stock, 100 shares are Class B common stock, another 200 millions are common stock, and 10 millions are preferred stock. Holders of Class A common stock and Class B common stock have identical voting rights. Class A common stock holders are entitled to 1 vote per share of Class A common stock, and Class B common stock holders are entitled to 10 votes per share of Class B common stock. Holders of these two types of common stock can vote together as a single class on all the matters. For example, the holder can elect the company's director. For the economy rights, share of Class A common stock and Class B common stock will have the same rights and privileges and rank equally, including the following. First is the dividends and distribution. The holders of Class A common stock and Class B common stock will be entitled to share equally and identically on a per share basis with respect to any dividends or distribution of cash, property, or share capital stock paid or distributed by the company. The second one is liquidation rights. If the company is in the situation of liquidation, dissolution, or winding up, the holders of Class A common stock and Class B common stock will be entitled to share equally in all assets remaining after the payment of any liability, liquidation preference, and any accrued or declared but unpaid dividends with respect to any outstanding preferred stock. Now let's talk about how Yelp generates revenue. Yelp generates revenue from local advertising, brand advertising, and other services. As you can see in the table, local advertising is the biggest revenue, increasing from 20 million in 2009 to 58 million in 2011. The local advertising include enhanced profile pages and performance and also the expression-based advertising in search on website. Yelp also generates revenue from brand advertising through the sale of display advertisement on Yelp's website, which includes advertisement from leading national brands in the automobile, financial service, logistics, consumer goods, and fitness industry. After talking about how Yelp generates revenue, let's move on to the cost of revenue and expense. Yelp's cost of revenue consists primarily of credit card processing fee, web hosting, internet service costs, salaries, benefits, and stock-based compensation. For the sales and marketing costs, it includes business acquisition marketing, community management, branding, and advertising costs. For the product development costs, it includes outside service, consulting, allocating facility, and other supporting overhead costs. Yelp believes that software development is important to attain its strategy objective. Thereafter, it expected the product development expense to increase in the foreseeable future. Also, Yelp has the general and administration costs, which include salaries, benefits, compensation for executive, human resource, and other administrative employees. Yelp believes that additional costs of becoming a public company will be between 3 million and 5 million per year, given the expected increase in audit fees, regulatory compliance, listing fees, and the increase in director and officers' insurance. Also, contribution to Yelp's foundation, depreciation, and amortization are part of cost of revenue and expense. Liquidity and capital resource. By the end of 2011, Yelp had cash and cash equivalents of 21.7 million. It did not have any short-term or long-term investment. Additionally, it did not have any outstanding bank loans or credit facility in place. The cash flow mainly consists of operating, investing, and financing activity. Operating activity refer to general operation revenue and expense. And investing activity consists of purchase of property and equipment to support the build-out data center. Yelp invests in technology hardware to support the growth in headcounts and software to support the website development. In 2011, 7.5 million of cash were used in investing activity include website development, property and equipment purchase to support the business growth. Thereby, Yelp expects to continue to invest property, equipment, and development of software in future. Financing activity consists primarily of net proceeds from the issuance of redeemable convertible preferred stock, as well as the issuance of common stock related to the exercise of stock option. The graph in this slide compares Yelp assets in last 5 years. Before the IPO, Yelp has about 95 million in cash and short-term investment in 2012. However, the amount increased to almost 390 million in 2013, which was 4 times increase from 2012. This tremendous growth may indicate Yelp has input more investment as their business expansion.
Now, everybody, let's talk about Yelp's IPO process. Yelp's lead underwriters are Goldman Sachs, Citigroup, and Jefferies. The underwriters' co-managers are listed as Allen and Oppenheimer. Yelp's user base is growing. To Yelp, unique visitors represent the average number of monthly visitors over a given 3-month period. Yelp had approximately 66 million unique visitors on a monthly average basis for the quarter ended December 31, 2011, which is up for 67% for the same period in the prior year. Yelp users have contributed a total of approximately 25 million cumulative reviews covering a wide range of local business categories. The top 5 industry categories accounted for an aggregate of approximately 78% of Yelp's local advertising revenue for the quarter ended December 31, 2011, broken down as follows: home and global services, restaurants, beauty and fitness, health, and shopping. When we were researching about the Yelp company, we always had the question why Yelp's business is not profitable. Well, the answer is obvious. Revenue is growing, but so are costs. As I mentioned before, Yelp generates its revenue primarily from the sales of advertising on their website to local businesses and national brands. During the year ended December 31, 2011, Yelp generated net revenue of 83.3 million, representing 74% growth over 2010, but a net loss of 16.7 million and an adjusted EBITDA loss of 1.1 million. That's why Yelp is not profitable. Each day, millions of consumers come to Yelp platform to connect with their local businesses. As you can see here in the consolidated statement of operations data, in 2010, Yelp's net revenue was 47.7 million, which represented an increase of 85% from 2009. In this same period, Yelp generated a net loss of 9.6 million and an adjusted EBITDA loss of 5.7 million. For the 9th month ended September 13, 2011, Yelp's net revenue was 58.4 million, which represented an increase of 80% from the 9th month ended September 30, 2010. In the same period, Yelp generated a net loss of 7.6 million and an adjusted EBITDA loss of 1.1 million. Well, obviously, Yelp does not expect to be profitable in the near future as they continue to invest in their future growth. Yelp intends to grow their platform and their business by focusing on the following key growth strategies. Growth in existing markets. Within existing markets, Yelp will seek to increase the number of reviews, attract more users, increase usage of current users, and attract more business. The other growth strategy is expand to new geographic markets. Yelp is active in the United States, Canada, and Europe, and they see a significant opportunity to grow and continue expanding their footprint in new markets, both domestically and abroad. Also, Yelp plans to continue to innovate and introduce new products for their website and mobile app and to introduce their content and solutions on new platform and distribution channels, such as automobile navigation systems, web-enabled television, and voice-enabled mobile devices. Yelp is also intended to grow their sales force and expand their portfolio of revenue-generating products in order to reach more businesses and increase the amount they spend on their advertising products. Now let's talk about the risk associated to the Yelp business and the ownership of its common stock type A. As we all know, Yelp incurred significant operation losses in the past, so they may not be able to generate sufficient revenue to achieve or maintain profitability in future. Also, Yelp relies heavily on traffic on their website from search engines like Google, Yahoo, and Bing. If their website fails to rank prominently in unpaid search results, traffic to Yelp's website could decline and their business would be adversely affected. The other risk is if users do not value the quality and reliability of the reviews, photos, and other content that Yelp displays in its platform, they may stop or reduce the use of Yelp's products, which could adversely impact the growth of Yelp. The other risk associated to the Yelp business is Yelp's dependency on a strong brand. Yelp's business depends on a strong brand, and any failure to maintain, protect, and enhance their brand would hurt their ability to retain or expand their base of users and advertisers. If they fail to maintain and expand their base of advertisers, their revenue and their business will be harmed. Also, if Yelp fails to expand effectively into new markets, both domestically and abroad, their revenue and business will be harmed as well. Now let's talk about the risks related to the ownership of Class A common stock. The dual class structure of Yelp common stock has the effect of concentrated voting control with those stockholders who held their stock prior to this offering, including Yelp founders, directors, executives, officers, and employees, and limiting your ability to influence corporate matters. Also, Yelp's share price may be violated, and you may be unable to sell your shares at or above the offering price. There is no public market for Yelp common stock currently exists, and an active public trading market may not develop or be sustained following this offering.
Now let's talk about the stock movement of the company. As we explained, Yelp's stock has been on the market for about 2 years and 9 months as of December 2014. The initial price started with $24.58 cents per share on February 27, 2012, and it has reached the highest price of $97.25 per share on March 3rd this year of 2000. Overall, the graph shows current stability in the stock price about $60 for the months of October and November 2014. Besides the stock price movement, the company has not yet paid any dividends so far. Its earning per share of 0.02 is relatively small compared to the average EPS of 0.06, but the graph indicates the stock movement of soaring since the initial offer. Now let's see the entire market movement. This graph shows the average price movement in New York Stock Exchange from March 2012 through December 2014. The graph shows constant rise in average stock price. This soaring may indicate the national stock market's recovery from the level during the financial crisis of 2008. Let's compare this with Yelp stock movement. As you can see, Yelp stock price has been basically moving along with the market. However, for the last couple of months, Yelp stock price has moved opposing to the market. One of the main causes of the decline is the announcement of the lawsuit in the beginning of last September. The securities litigation law firm of Brower Piven, a professional corporation, announced that a class action lawsuit has been commenced on behalf of the purchasers of the Yelp Inc. common stock. According to the Wall Street Journal article, the complaint accuses the defendants violations of the Security Exchange Act of 1934 by virtue of the defendants' failure to disclose during the class period the true nature of the so-called first-hand experiences and reviews appearing on the company's website, the robustness of its processes and algorithms purportedly designed to screen unreliable reviews, and the extent to which the company's forecasted financial growth prospects were reliant upon undisclosed businesses, including but not limited to required business customers to pay to suppress negative reviews. Yelp's failure in financial information disclosure and associated lawsuit caused the stock price down in approximately $20 within 2 weeks after this announcement. Let's explain the four factors that causes increase or decrease to a stock price. First factor is company news and its actual performance. Especially those individual investors may be less confident when hearing bad news of their investing companies. More importantly, good financial performance encourages buyers for investments as they expect higher returns from those prosperity companies. Second, industry performance refers to the prosperity of the entire industry. In Yelp's case, it is categorized as the industry of business ratings and businesses. Third, investor sentiment refers to the entire stock market movement or demand side of the stock tradings. Lastly, economic factors including various political and economic events. These factors also include global economic events such as changes in foreign currencies prices and foreign political issues that would potentially affect the US stock market. Now let's apply those four factors into Yelp's case. Facebook currently announced its new business of online reviews and rating business hosting. It would cause the decrease in the Yelp stock price as new rivals enter into the industry. Since the IPO, the company became first profitable in 2013. Its earned interest and taxes recorded 3.51 million that should be attractive for potential investors. As for the industry performance, it has been holding conflicts with business owners reviewed on the site. This can negatively affect the future performance of the company as those reviewed businesses are primary customers of the company. As you saw in the soaring tendency in the entire market price, many financial analysts say that market is recovering to be a strong market. Increases in the numbers of smartphones and PC users would be good news for the company as it potentially increases the numbers of those end users. The industry itself is a developing market. However, the ease of the new entrants and globality of industry is the most challenging part for the future expansion. Performances of the existing domestic and international rivals such as Tripod Advisor Zagat's also influential to the company's stock price, depending on how competitive the Yelp is.
Thank you for your time, and we will appreciate your evaluation.